G'day folks, it's Jim here from Orchard Forex. In light of Wednesday's extra strong reading from the ADP private jobs data and ahead of tomorrow's non-farm payrolls report, I thought I'd do a quick video on the possible outcomes as I see them for the US dollar. The ADP came in, I'm sure you all know, as at almost double expectations of 156 with a reading of actually nearly 291,000. And if the non-farm payrolls does the same, we can expect to see a fairly stronger dollar. I think yields will go up, stock markets should go higher as well, as expectations of a Fed rate cut dramatically recede. Although it has to be said the correlation between the ADP and the non-farm payrolls isn't all that close, and quite often they do diverge fairly dramatically. Even so, with expectations of 160,000 for tomorrow's non-farm payroll, there is a good chance that the figure will be beaten, and so we could see the dollar higher. That's as long as, of course, that risk sentiment remains positive and we don't see any dramatic escalation in the coronavirus. Which could make for some weekend gapping. So let's go and have a look at the charts anyway. I'll start with the dollar index here. And the dollar index looks pretty okay to me. We had this dip earlier in the week and the dollar did come off a fair bit, but it's regained its ground. And we're now back up here at sort of 98.30. And we're within striking distance of the 2020, this is 29th of November high. Yes, 29th of November 19 high, I should say. That's at 98.54, so only 25 points away from that. We've got the 61.8% FIBO level here at 98.40 to overcome, but the indicators do look quite positive on the dailies. The weeklies are less so, but I do think that if we can take out this 98.40, 50 area, we could see the dollar move potentially quite a lot higher. So, and I think that mainly applies to the euro. So we'll move forward and have a look at a euro chart. So here we are with the euro, and the formation that I've been watching over the last few weeks is this head and shoulder top that's been building here, with the neckline seen here. Now, what I'm hoping for is some follow through on the downside. We've obviously broken the neckline. We came back to test, it never quite got there. But if we do see the extension, we could go down towards the 109.30. We've got, well, we're sitting on support here at 110 at the moment, just below it. But we've got FIBO extension support down here at 109.70. The actual FIBO retracement level is at sort of 109.60, and then we've got the 100% extension of the head and shoulders at 109.30. That's kind of what I'm looking for. The 4 hours of charts are pointing lower. The dailies are beginning to point lower, perhaps. The weeklies are pretty neutral, but I'm really looking to sell into rallies, and I don't really think that right now we're likely to see it really much above sort of 110, 20, 30, something like that. So I'm looking to sell there. If we were to get back above this high here, this minor high, so 110.50, I'd probably stop myself out. But in the meantime, yes, I think we've got further to come on the downside. On dollar yen. Dollar yen is quite interesting. It's very risk on, risk off, depending on the mood of the day regarding the coronavirus. But we're coming back up here, 109.80 at the moment, and we're trying to test this lengthy or long-term trend line, starting way back here in June 2015. So that's just ahead of us at around just above 110. We've got these highs back here, 110.25. Now, if they get taken out, we can expect to see a filling of this gap up to around 111.10.20, and beyond there, we could go a fair bit higher. So 111.70, and then this high up here was at 112.5. That's a long way off at this stage. The dailies are not really showing us a great deal at the moment, to be honest. The 4-hourly charts are pointing higher. They're becoming a little bit overbought, but by the time the non-farm payrolls come around, they have probably armed themselves out a little bit. But it does look to me as though the dollar could be looking for a break of this level, this 110 to 110 to 20 level, and if we can do that, then I think there's a fair bit of blue sky ahead. Sterling, won't go into it too much, but it is beginning to look a bit heavy, and I'm just wondering if we are building a head and shoulders. This would be a 7 big figure move on the downside if we take out this support here, which is at 129, sort of 80 or 129, 60, 50, something like that. Got the 100-day moving average, the 200-day moving average, but the spike to the neckline, as I say, could take us potentially back down here to 123 area. So it's worth keeping an eye on. Brexit headlines make it very choppy to trade. It's very difficult, but we wait and see. But it does look to me at the moment as though sterling may head a bit lower. The Aussie's recovered pretty well from the kind of double bottom that it made back here at around 66, 65. It got down to 60. This was 68, 66.80 down here. Back here was 66, 65, and it has recovered. 4-hourly charts look mildly positive. The dailies also may be turning higher, but if the US dollar is going to strengthen dramatically, the Aussie's going to be fighting some pretty strong headwinds on the top side. So I wouldn't be looking to get too long. My own view is that we're going to see some pretty dire economic numbers coming out for the first quarter on the back of the bushfires, on the back of the coronavirus, low retail sales which came out just now. So I think if you do see the Aussie head to sort of 68 and higher, it's probably a sell, and I'm really basically looking for a move back down to here, to these lows here. And if we do, in the longer term, if we take this support out, as you can see from this red line here, there's not an awful lot to hold the Aussie up until we go way back here to these 2009 lows, which where are they coming in? Sort of below 63 cents. Now, I don't think we're going there in a hurry, but I do think that's the direction of it, and it's worth keeping an eye on. Pretty much the same applies to the Kiwi, although the Kiwi hasn't bounced as well, given the positive risk sentiment that we've seen recently. Once again, we've got a head and shoulders here. The objective down here, the head and shoulders, is 64 cents basically. Good support here at 64.5, but we could easily see another 50-point drop off. And if we do take that out, then the next sort of level of support minor here at sort of 63.5, and then at 63.30. So we wait and see on that one. But I must say that the Kiwi, I think if the Aussie does, as and when the Aussie goes lower, I think the Kiwi will be not too far behind it. I think that's probably about it for the moment. Just a quick look at the stock market. There's no point fighting this long term uptrend here. This is a weekly chart, and we are looking somewhat overbought, but you'd be foolish to bet against this now, I think. And if we do take out, or if we do see some strong jobs data on Friday, the stock market's only going to go higher. Likewise, we have a look at gold here. Gold is looking to me headed in the opposite direction. If we see a stronger dollar, a stronger stock market, there'll be less need for a safe haven currency, and I can see gold breaking this FIBO support here, 1547 or so, and heading back down to that low, wherever that is, 1535, 50 or 1530.35, and then possibly on down here to 1510. That's a long way off at the moment, but I do suspect that's the direction of it. And finally, quick look at oil. Well, I think oil is still in trouble because of the decline in demand due to the coronavirus, particularly out of China. So all that has come off a long way already. I think the dailies are pointing a bit lower, but the weeklies, although they're not doing an awful lot at this point, I do think there's room for them to come lower. So I'd be a seller into rally. Going back to the 4-hour chart, I'd be a seller into a rally up around here, 53, 53 and a half, something like that. If we took out this support here, 55, I'd probably be out of it, and I'd certainly, use this as a guide. 55.50, I'd be out of any shorts. But for the time being, I still prefer to sell into rallies, looking for a new low. I should say though, we are seeing some slight bullish divergence here on the 4-hourly chart, so it could yet be that I wouldn't be in a hurry to sell it here. Probably leave it till we see a move above or towards above 53. The FIBA level here, 53.15. But I'd certainly be a seller there, looking for a move. In my opinion, I think we can probably head down to this FIBA support down here, just about $48, possibly lower. Anyway, we'll leave it there for today. I hope that's been useful to you, and I'll do another one fairly soon. Cheers.